Morning, everybody, and welcome to Q&A with Whitey. Thanks so much for joining us. It seems like forever since I've sat here and done this. Well, probably is. I'm actually in the office today. I'm not at home, so you get that. Sorry for the dodgy background. It is what it is. But welcome. Going to be a great conversation today. Make sure, just so you don't forget, coffee on the go and some morning tea. My wonderful wife has been able to do that. She's made me some homemade brownies that are diabetic friendly. And they are. On the topic of diabetic, I'm type 2 diabetes I suffer from. I'm now 7 months free of having to stab myself in the stomach every night with a needle for insulin. So diet works, diet controls type 2 diabetes, and I'm living proof of that. Lost 11 kilos on the way through while we're at it, so we're all good. But yeah, 7 months without having to jab myself with a needle. I can't tell you how damn good that is. Anyway, let's get on with things. Get your coffee, put your feet up. And we better do a couple of things first before we get too far. Let's thank our sponsors who support us, support the FBAA, support what we do here on Q&A with Whitey. So we have ALI, Bluestone, Finstro, Prosper, Heartland Finance, Suncorp, On Deck, Pepper Money, Affordable Staff, Insurance Advisor Net, Lend, Credit Fix Solutions, Strive Financial, AAMC, FE, FundTap, Amfin, and Trailbook Loans. All wonderful people. Thank you for your support. Enables us to bring all this content to our members free of charge and to others. So excellent. Important announcement before we get too much further too, and it's really glad to see that Victoria and New South Wales are stepping out of their lockdown curfews as such, I guess, over a long period of time. Difficult times for all those people. We know, we hear it, we hear your stress, we hear the anger as well, and we understand it's challenging. But if you need professional support and help, ring that hotline, 1-800-808-374. It's the FBAA Member Confidential Counselling Program, CCP. It's there for you. It's in complete confidence. They don't tell us anything about conversations, and the wonderful people at Suncorp pick up the bill because nothing's free, and we all know that. So I better not do that. Look at that. Geez, I'm getting thin on top. Gee, that's scary. Better keep your head up. But yeah, so Suncorp, wonderful people who support us with that. So don't forget, if you need professional counselling, that's where you go. It's free for you as a member of the FBAA and your family. So, and the other thing, of course, is coming up very, very shortly, and it's amazing, the year's almost over. In roughly just under a month from now, our national live streamed event, International Men's Day. We do it every year. It was great fun last year. It's going to be even more fun this year. So come along and join us. Register now for a couple of hours. We have some great people speaking, bit of fun, and join us. It'll be cool. So let's move on, because I'd like to welcome today's guest. Is a lady that I've been busting to have back on Q&A with Whitey. When we last spoke, it was such a great conversation, and I have always wanted to revisit where we're at and see what's happening today in the wide world of real estate, as viewed from an expert in that area, as a personal buyer's advocate or agency in the property sector. Kitty Parker. Kitty, welcome. And folks, Kitty's in the throes of moving, so she's having all sorts of fun at her end. But anyhow, Kitty, put your camera on, turn your mic on, and let's have a chat.
I'm here, Whitey. I'm here, mate. I'm here. Yeah, how are you doing?
Yeah, good. And you?
Yeah, really good, mate. You know,
moves are always a stressful thing.
You know, I think the hardest thing is when your internet keeps dropping out, you can't find the phone charger, you're like, where did I put the laptop? All the basics, but we're good. You know, lighting's pretty good, so no complaints here, but no, all good, and happy to be out of lockdown, as I'm sure, goodness me, I'm sure Victorians, New South Welsh men and women, we're all pretty happy to be seeing coffee shops and the outdoors again.
It's been a long, difficult road. Been a long, difficult road, and I sort of tagged it early in the conversation we're leading in, that very stressful on people. But you know, we're hearing, seeing, and feeling people's emotional anger in regards to really what they've been through, but it just sort of lashes out in different ways. And I guess that makes the world a little bit harder than well, I was going to say than what it normally is, but I guess it's always hard, but it just adds that twist to it that nobody needs, and just makes it really hard on people. So I'm so glad to start and see these things open up for all the right reasons, and hopefully soon we're not too far away from seeing international travel. So that will be a good step forward too for that industry sector.
Agreed.
And for people wanting to get out and about even further than their home state. I haven't moved, but I screwed up on some of my technology. Normally I have an iPad with me as well where I have my questions, but today I've had to print them out. So
right. That's so good. And I don't even have the rundown of questions and anything that's going on. So this is winging it. We're like legit winging this.
The whole point. And that's why I speak to people just like you, because I know you know your shit.
Oh, goodness.
And I won't throw you a curveball that I think is wrong. But anyhow, we're all good. We're all good. Let's start the conversation though. Before we get into questions.
Yep.
Can you give us a little? I know we did this last time we spoke, but there are a couple of hundred people around the country watching us today.
Yep.
And people may not have heard from you beforehand. So give me a little bit of Kitty's story. Has Kitty always been in the real estate game, or
No.
where did you start your career, and tell us a little bit about now, and then we
in 20 words or less, Kitty. Okay, it's 20 words or less. So
give me more. Give me
25. I am probably the most non-real estate-y real estate person. I don't have a background in real estate. I have a background in psychology, and fast forward to just under 3 years ago, started Kitty and Miles, which is, I started as a solo buyer's advocate or buyer's agent to assist people in the purchasing of residential property. And over that period of time, I've now expanded to, I have other buyer's agents that I work with, and there's nothing that is, what would you call it, like subcontracted. It really is a tight team where we work together to assist people buying residential property or owner-occupier property. We cover all of New South Wales, South Australia, Queensland, Victoria, ACT, so Australia-wide. So I guess that's a bit about me. I guess suffice to say I'm not very real estate-y, a little bit more casual than your average real estate agent. But deep inside there is a bit of a closet geek, a closet nerd, somebody that is very statistics-driven, data-driven, evidence-driven. And I think I just have a knack with historicals and market forecasting, crunching all the numbers and that, as well as the human side of being able to tap into understanding people's fears when they're buying property, or their nerves, their things that they may not even know, and tapping into that. So that's me, and I couldn't do what I do without the team behind me. So I think sometimes people think, oh, Kitty, you've done really well, good on you. But I go, I'm only as good as my staff that keep the wheels turning while I'm running around like this. So that's a little bit about me.
Goes with all of us. So tell me what is, and just to help those through who aren't 100% across this, tell me what is a buyer's advocate, a buyer's agency? What is it? What does it do?
What do I do?
All that sort of stuff.
Yeah, good question. So
the fact that you're brilliant, but we'll put that to one side, just generally speaking.
Gotcha. Well, most people are aware that when you're selling a property that you engage a sales agent, and that person very much project manages the sale of the property end to end, because so people will, a real estate agent, a real estate sales agent, and that person will be there advocating for their client who is selling the property, the vendor, and they'll work in the best interests of their vendor, their client. But what we don't see as much of is people out there that squarely advocate for the property buyer. It's really the done thing in Australia where you buy a property on your own. You know, you can go out there and go to open inspections and you can negotiate and you can do all that on your own. But there's an uneven playing field there because you've got a real estate professional helping the person selling a property and advocating for them. Well, you could be a rookie property buyer just out there trying to navigate everything yourself. So people like myself, buyer's agents or buyer's advocates, we come in to even that playing field and level up and squarely advocate for someone buying property to get them the best deal, to evaluate a property, appraise a property, work out things like gross yield, whatnot, and basically help support somebody from end to end, sourcing property, you know, shortlisting, negotiating, all of that right through to settlement.
And I would have thought in the style of environment that we're in at the moment, someone like yourselves or, you know, a buyer's advocate in general would be really, really critical at this point in time. I mean, we're seeing commentary in the media, and I see it in my state where I live up here in Queensland, what's happening with property prices, and you sort of say, going, they're trying to sell that for that price, it's not worth it. Yeah, it's you know, it's an overheated market. We're seeing APRA make moves in the lending sector to try and cool the capability of borrowing too much, so increasing floor rates, which then limits the amount you can borrow, which means it'll limit the value of a property you can buy. But all of that is a little twist, rightly or wrongly, to try and help cool this without lifting cash rates and sending them through the roof and having exorbitant home loan interest rates. I can remember when I first started doing home loans in the 80s. Don't tell anyone.
My goodness. Wow.
But yeah, I was doing home loans at 18.5%. God forbid, we'll never go there again. But 18.5%. Imagine the floor rate on that, and then trying to meet any serviceability. Interesting times. We'll never go there again. But you know, we sort of could see these moves because of what's happening in a marketplace that just seems to be on this, you know, steep climb somewhere. What sort of impacts are there any? Well, what's your view of what the market's been like of recent versus what it's starting to look like today, with some of these moves being heralded by the likes of APRA and then the banks stepping in line? Are you seeing any trends happening yet, or is it a bit too early?
No, definitely have seen trends. And I think on a national level, it's safe to say in pretty much all the capital cities, there have been really good market surges. Obviously, it's relative to the city in question. Like typically Sydney goes gangbusters when it goes up, and you'll have other cities that may not go up quite as quickly, but still follow that same pattern. So I think it's safe to say across all capital cities, the markets are really hot, and buyers are actually struggling to navigate low stock supplies and really high levels of buyer competition for the few properties that are available to purchase. So that is also assisting with the inflated sales prices and the market increasing, because you've really got buyers that are scared of missing out. And as I often say to people, I feel like in these markets, the open market of buying property is a bit like a gladiator ring at the moment, where you get the property buyers in there, you have one property, and they're just like fighting it out as to you know, who's going to get it. And it's less about what a property is worth and how deep someone's pockets are, so you know how high their budget is. So it's a very skewed market at the moment. And this is, for want of a better way of saying it, generally across the board in most of the capital cities at the moment.
Is it still running like that, or is these changes by APRA having a impact, big, little, nothing? I made it too early to even determine. So.
Okay, this is just my professional opinion. I think the changes that APRA are recommending and requesting of lenders I think it will be a little dent in the market. I think it will potentially help to somewhat possibly stabilize, but I actually don't think it's going to do too much because it's not enough, to be honest. I think there's a lot of upward momentum, and with interest rates being at such low levels, finance is cheap still. We've obviously had, you know, border restrictions, international travel restrictions. So people have actually had a little bit more opportunity to save, you know, like especially in New South Wales and Sydney, we haven't been able to do anything. So we can't really go out and spend money. So I think that it's been a little bit of a perfect storm there, you know, for people having a little bit more by way of funds, cheap interest rates, and there's low stock levels. So I think it's just really come together and compounded the situation.
It's interesting you say on the stock levels. I know I see here that things hit the market and they're gone so quickly, it's not funny, whereas other things are still sitting around for a while. So it's always an interesting curiosity to me as to, you know, what's really flowing underneath that to cause some of these imbalances and changes. And I know Queensland has always been a very high percentage of migration from southern states, so people buying down from the southern states, buying into Queensland, and whether they relocate or whether they invest, whatever it may be. That's been a long-term thing. But I went to the Queensland government's handing down of their state budget earlier this year, and that rate was rising back then. Are we still seeing, or are there any evidence that you see anyhow of people buying interstate to invest or to once they can?
I think that has been one of the biggest changes in the last few months, that when we had we'll call it the initial COVID lockdown periods and that of last year of 2020, what I saw there were investor buyers got a little bit scared, and they kind of pulled back, waiting to see what would happen with regard to government incentives, you know, the whole COVID thing, etc. And so when the pricing started to lift, it did start there as well in Queensland, but as the lift kind of more took hold in the last few months and through 2021, it's predominantly been driven by owner-occupiers. However, the shift in the last few months has very much been a confidence coming in from investor buyers as well. So I think we've had the owner-occupiers there kind of running the show, and some of them have gotten a bit miffed about, you know, the affordability of prices if things have gone up. But what we've had then is the investors starting to, you know, get over their cold feet, and they're starting to step back into the market. So it's almost pushed the second wind, I think. So definitely I've seen people from New South Wales gearing up for the Queensland market, and I think that's been pushed on even more with the Olympics in Brisbane in 2032. I think we've really started to see on the ground a bit of swell there, with people going, oh gee, should get into that one.
That's a very interesting point. So we, FBAA, our tenancy is up here early next year, and we're moving. Forget all the reasons why, we just are. But as we've been going through the process and looking at properties, finding you know, office space has been difficult. But the agents were telling us, or the managing agent that we use was telling us that that is 24 hours after the announcement of Brisbane getting the Olympics, everything went nuts, and it just doesn't stop. And that's commercial, retail, and residential. And just up here, everything's just sort of taken another lease of life.
Very true. And I think it's also the second part to that has been because of COVID, and because Australia has handled COVID so well, you know, especially, you know, some people look at Queensland and go, but you guys haven't had that many cases. You haven't had as much by way of lockdowns and lengthy lockdowns as New South Wales and Victoria. So Queensland was, you know, was always seen as the sunshine state. Now it's the sunshinier state. So I think you do have people from here looking to relocate. The affordability is better there. and you've got the Brizzy Olympics announcement. Again, I think it's really bolstering the market up that way, not just Brizzy, but the Sunshine Coast, Gold Coast. Like you've got even the North Queensland market has started to have a bit of a trickle. So yeah, I think that's pushed it. Pardon?
Our state premier will be very happy to hear that.
Yeah, very much. Yep.
The challenge is so when you look at buying something here at the moment, you sit back and go, yeah, that's just not worth it, and people are paying for it. So I understand it, and someone who is professionally qualified in psychology will probably get this at AMSite better than me, but that we're seeing that people from other states where property prices are generally more expensive, looking at the Queensland market and saying it's a lot cheaper. I can spend, for what I can buy for $1 million in Sydney or Melbourne, I can buy half as much or almost double what I get in Sydney or Melbourne, whatever it may be. Yeah, rough numbers. You get a lot more for your money.
Yeah, spot on. Spot on.
Doing is potentially artificially increasing the price of those property, because we've got a market up here at the moment going, well, I might have originally been happy to sell this for $750. They're prepared to pay $1 million. Let's make it $1 million.
Yeah.
Where does that stop? Because you're sort of going, what you're doing is artificially increasing property values that at some stage need to balance back down. And I generally talk of it as more of a correction. It's not a recession as such, but if we started here and went there, the reality might be in here somewhere. Is that something that might play out, or are we really resetting the goalpost a lot higher than what they were and or should be?
Yeah, okay, good question. I think market corrections are inevitable. We never just have exponential climbs, and I say the same. There will be a correction. How the corrections that will occur will affect each capital city, though, I think will be very different. So generally speaking, Sydney, and to a bit of a lesser extent, Melbourne, those markets really allow for an influx of immigration and are the markets that will lead international immigration when everything opens up. So with regard to this correction, I think it's markets, just for layperson speaking, it'll be markets such as Sydney that will correct, but overall will be able to withstand more so inflated prices than a market such as Brisbane. So what I think we'll have potentially is Sydney will, we've had these incredible, I'm not even exaggerating to say 35% growth in with comfortably the last 12 months. And it's going to continue for a little while yet, but let's say we have a correction. That correction could be in the area, it's probably going to be somewhere between 5 and 10%. So generally speaking, everyone here, you're still sitting pretty, right? But when you have the Brizzy market that's smaller, and what I notice is because of the affordability there, it gets saturated a lot quicker. When that market corrects, it's going to inflate even more so in an unrealistic way. But when it corrects, the danger is the people that have overpaid will then end up with capital decline, and they're going to be sitting on potentially an investment or a property that will then take them a few years to recoup and get back to zero. I don't think Sydney will suffer quite that fate, purely because the capital cities have different idiosyncrasies, different population drivers, etc. I could get into a whole essay about it, but for want of summary version, you could time me, summary version, I do think it's a lot more dangerous in Queensland and in Brizzy when a market overinflates, because the volatility that follows with that contraction tends to be greater.
Yeah, very fair point. I mean, don't get me wrong, I sit here with a gut feel that sort of says that makes a lot of sense to me. That's how I actually view it. But I've got no expertise whatsoever in the property market, so it's very much a novice's view and an armchair view of what I think might be. It could be completely wrong. It's interesting because when we looked at the different states, is this predominantly an East Coast thing, or as we've seen with COVID, would WA have the same sort of situation as Queensland, given they're very similar with the COVID experience? And does New South Wales wind up, or does Victoria have a similar situation as New South Wales, given they've had similar COVID experiences?
Yeah,
Does
really
it play
good
out?
question. No, you know what, you're right. There tends to be, and I don't want to oversimplify it, but there does tend to be a bit of an east-west coast divide. There does.
Yeah.
WA, the market there really relies on different factors. The property market there relies on different factors than generally the East Coast market does. So the East Coast is more population driven. Over here, you know, there's other drivers. WA, it's more infrastructure. There's things there that drive the market more. It's almost like, and I don't want to say this because I never want to alienate, you know, our Westerners there, but it can be like another country. It can operate very differently like another country.
Yeah.
So WA, I very much respect and understand why their approach to COVID has been very stringent. And that's because there's more to protect over there, because their market is smaller, it's a lot more volatile, and it doesn't have, as I say, the same, especially population growth drivers and tourism drivers and investor focus that often the East Coast has.
Yeah, it's interesting because when you look at it geographically as well, they're basically 1/3 geographically of the entire country. And it's sort of like a big land footprint with a small population that's impacted in different manners compared to others, where New South Wales has got the largest economy in the country, but it's by no means the largest state.
Absolutely.
Very depressed. And Victoria also. But
okay. if I can just add, Whitey, they've still had growth there through COVID. So when I talk about, you know, over the national scope, we really have seen growth. Even over there has been growth through this COVID period. So we can say that, generally speaking, across the board, the market has been, you know, performing quite strongly as far as growth cycles go in multiple states, including WA.
Hey, we touched on something last time. You may not remember. We didn't deep dive into it. It was something that once we eventually got back together here, I wanted to talk a bit more about. And I'm wondering if this situation may have almost died because of the influence of what we've just been talking about, whereby real estate agents were starting to, and we were getting commentary on this, publicizing sale prices, although most of them don't anymore, it appears, but when they put a sales price on it, it was sort of like almost 30% below what they really thought it was going to drive at. So you see something advertised for 800 and go, oh, that looks really good, and it sells for 1.1, 1.2, and they knew that was going to happen all the time. But it's almost like a way to get leads in or get people through the door and have a look. That was a little while ago now that we're seeing a lot of that. And I'm just wondering, does that still happen, or has it almost died because of the other influences and impacts that we've got at the moment?
It's alive and well, unfortunately. It's alive and well. So look, there was a bit of a media blitz a couple of months ago where the media were kind of pointing the finger at agents, going, hey, we're noticing this kind of, we think it's dodgy behavior, and we're noticing that sales prices are far, 20, 30 or more % above the actual guide price, and they noted to sales agents, there's regulations in place where you need to ensure this, that, something else. So there was a bit of a media alert out there about that you would think would help sales agents, I don't want to say pull their neck in and keep themselves in check. And what I noticed, some did. So some did see that blitz and kind of go, oh goodness. And they got a little bit more realistic with the guide price. But generally speaking, no, it hasn't happened. And I still see that in multiple states where the end resulting sales price, or for us as a buyer's agent business, the purchase price will be far greater than that advertised. And a lot of what our role is at my end is really educating buyers on the realistic appraisal price of a property, and that is very different to a sales price guide or an auction price guide. And I think that's almost like, in this market, to me, that's buyer 101. It's like, right, here's the sales price. It's very, very different. Great disparity.
I don't know what the laws and regulations are, or the legislation around how real estate agents operate. It's not my area, but it almost seems to me like they should be forced by law, if you like, by way of transparent disclosure, to say, this house listed at this price, or was advertised to be listed at this price, it sold for this price. To disclose when it landed. Now, I do see in some websites where they tell you what a house sold for, but you don't see what it was listed for. Sometimes there's some RPA data, I think it may be, searches that shows you what it sold for in the past, but that's not necessarily indicative of what it's going to sell for now. I know they've never wanted to do it, but you kind of think maybe they should be forced to do it.
Look, there are regulations in place, and it differs between states, but there are definitely regulations in place that stipulate that sales agents are meant to guide a sales price within a specific region of what the property is worth. I think where the issue also rests, and you touched on this early in this conversation, where you said that sometimes there's vendors that may go, you know what, I'd be happy with 750K, but they see the market going a little bit, hot and heavy, and they're like, oh, now I want $1 million. So what I've also heard from sales agents is they're struggling to keep their vendors' expectations in check. So sometimes it's not just the sales agent that is being a little bit shifty here, but sometimes the vendor, they see the media, they speak to friends and family, and everything's on the up and up. And that sales agent will have a problem with getting their client, the vendor, to have a realistic understanding of what to expect. And so sometimes it's greed. Sometimes it is greed at that end as well. So there's two sides to the same coin here, I think.
It's a very fair and balanced approach to it. I always looked at it that the buyers were just getting shafted, but I hadn't stopped to think about the agents who are put under pressure by the seller to maximise, which everybody wants to get the best price they can, but to maximise beyond what is a reasonableness to something that is almost taking advantage of a person's situation.
Spot on. And then we can't forget also, Whitey, that a lot of these properties in a hot market will go to auction. So you don't just have the sales agent, but you have the auctioneer there, and they're trying to speak to the seller and go, let's set a realistic reserve. And if you have a seller going, I spoke to Uncle Bob the other day, or I spoke to my dad, and they reckon, this is going to go for 1.2 mil, so I want that reserve at 1.1. So you have the auctioneer trying to manage those expectations. You've also got the sales agent trying to manage them. It's a bit of a tough one when the media is, sparking this frenzy, and the lay person is trying to line their pockets.
I guess that's why too you've sometimes got to have these external interventions to try and get beyond that. Now, whether the move by APRA works a lot or a little, time will tell. I have some issues with it because of some of the unexpected consequences that can come out of this for people trying to refinance by having high floor rates and so on, and the first home buyers market gets slowed because of it. But so some challenges with doing this, but same token, when you think of what you just said then, you go, so well, somewhere else has got to help to sort of get this thing pegged into the right place in the ground. Otherwise, it's a real long-term problem for every state around the country. Otherwise, we've just gone and lifted house prices on a national basis that are going to cause pain for people for a long time.
I think honestly the two most logical options we have really are raising interest rates to really slow down the financing aspect. And I think that will have a bit more of an effect than APRA's, serviceability standards. But really, it's getting more stock onto the market. There's been such a long-term low level of stock that it's for whatever it is, some kind of incentive to sellers. I don't know what it could be, but bringing more stock onto the market and upping interest rates, so we get to slow down buyers a bit and encourage sellers a bit. It's like it's got to be multiple pieces of the puzzle fitting together to make change. You can't just have an APRA tweak over here and go, is that going to have a big enough ripple effect? No. I think we all know it's not going to do very much.
No. So I better touch on some of these questions. One of the questions I've got here, I think it's quite funny, and it fits in with what I say. Is it going to get easier? What is this going to be a long-term battle, or is this something that you think, given time, and time might be years, but this thing will gradually resettle? Because it's
I think it's going to be
tough.
Yeah. I actually think it's particularly going to get tougher for first-time home buyers in particular, because they're the novice folk coming into this. So not only is there that financial pressure because housing affordability is more, but it's like the hoops they have to jump through, the smoke and mirrors, all the games that you have to navigate now to try and assess what the real price is for a property. I actually think they're the ones that are hardest hit and will be harder hit in the long run. So that often means, it's a generational thing. It's our young people coming into the market and first-time home buyers, as well as I think you've got, the more vulnerable people. And I definitely noticed that it's not just an affordability thing. I'm getting more and more, we'll call them mature age clients, that are just nervous Nellies at the moment. They're just like, we want to downsize, or we might want an investment property for passive income for our pension days. We're just not even game to step into this on our own. Like when we bought our home, they'll say when we bought our home 30 years ago, it was one way. They're like, we're just not game. We don't even know how to get a foot in. So I think you've got the younger folk and the first home buyers, and you've got the vulnerable, I don't want to say baby boomers and that, or thereafter, that are like, how on earth do we do this? And I think it is going to get harder. I don't want to say that. I think it is going to get harder. I do, before it gets easier.
Yeah.
I do. I don't like saying that, but I think it is.
I agree. And it's same with lending. Lending gets more complex, even with basic things like home loans, which in principle aren't that complex, but the borrower structures get more complex. So whether they're running trusts, superannuation funds, multiple companies and so on. So the assessment becomes a bit trickier. But I guess, in one respect, I sit back and put a different hat on and say, well, I'm not too upset about that, because that's why we need professionals in this regard, and we need buyers agency to guide us on what is this thing really worth? How do we best negotiate this? What are the options? How is it best to handle the situation? As much as you need brokers, turn around and guide you on the lending side to make sure, as both people said, and you mentioned it earlier, acting in the best interest of the client.
I agree. I know you focus on me. You're so kind as your guest. You go, oh, buyer's agents. But obviously, I work every day with mortgage brokers. And I think even more so now, it's mortgage brokers and buyer's agents that are really the people that the average home buyer can lean on in markets, especially like now. I really do. I think I've always been an advocate for mortgage brokers. I think if you're going direct to a lender, you're doing yourself a disservice. I think mortgage brokers are worth their weight in gold, truly. And I think now even more so, that's being shown, with not just negotiating interest rates, but being able to support and advocate for their client in jumping the hoops of home buying. I've heard more from mortgage brokers in the last few months saying they've actually been mini buyer's agents. They've had clients that miss out at auction multiple times, so they're trying to help steer their clients through auctions. Like, mortgage brokers have had a lot more on their shoulders the last few months than I think people give them credit for. And I hear it every day with the brokers that I work with.
And that wasn't a paid comment, but thank you very much.
No, it wasn't. It wasn't. No, dead set. Dead
set. Thank you. Hey, do you see many people buying through superannuation trusts of late? Is that, at one stage that was a really big thing to do? I'm curious as to whether or not it is still something that people are doing, and if it's viable for them to do it, if they're investing, or what are you seeing? Anything there at all?
I do see more folks. I think back in the day, buying through, you know, self-managed super funds or other trusts of whatever kind, I think back in the day that was more, we'll call it just for the rich folk. You know, it was for that, the minority over there in their palaces, and they could afford to do all this and have all these trusts. And I've really seen more and more, it's the average folk that have worked hard year after year, decade after decade, and they've got a nice pool in their super, and they recognize they need their super to work better for them. They're sitting there going, goodness, when I get to retirement age, is my, you know, employee guaranteed super or the extra that I've popped in there, is that really going to cut the mustard for me? And so what they're doing is they're going to a financial advisor or accountant, and they're choosing to swing that over into a self-managed super fund so they can do more with their retirement funds than an average industry fund could do. And so I'm seeing these folks go, you know, let's invest in a property, because bricks and mortar bought in the right area will get us better growth than just sitting in an industry fund or just us popping in our super. So I am seeing that more and more from the average, you know, working person. It's not just for rich folk.
So I think you touched on it a bit earlier, but two things. One is, you know, as you mentioned, go see a financial planner. This is all in the world of planning. I'm not in the planning game. You're not, but you, from memory, or what you said before, you actually do or are able to do the analysis of what the returns could look like and stuff like that to help formulate decisions that would then back into an a self-managed super fund structure as such. I always get the acronym, can't get the tongue around it. We stick with self-managed super fund, to say that easy. But would that be right? You are able to prepare an analysis for a planner to consider for somebody's portfolio?
Absolutely.
So this is you shouldn't do when you look at property.
It's similar, you know, it's similar in ways to someone that's buying an investment property. So in some ways it's similar in that regard. You're crunching growth, you're crunching rental yield, you know, income versus outgoings. Just with self-managed super fund buys, there are certain other idiosyncrasies, there's certain other nuances, because when you buy in a self-managed super fund, obviously there's government regulations, because the government sees a self-managed super fund as basically your retirement funding. So it's really locked down tight. It's tighter than if you're just buying an investment property in your personal name. So there's lots of hoops to jump through. There's lots of regulations there, as well as when you buy a property and you're coming to, say, a mortgage broker for finance, you're not getting just an investment property loan. It's actually under corporate interest rates, because your self-managed super fund is seen as an entity. It's seen as like a corporate entity. So obviously the interest rate in that regard will be a little bit higher. So there's lots of little bits and pieces that can be a little bit more complex than just a typical residential property buy, whether it's owner occupier or investor buy. So being able to help a client understand these additional kind of nuances, I think is really helpful for people. And I think for mortgage brokers, having a good understanding of the lenders that will fund for self-managed super fund purchases, puts them 10 steps ahead of potentially the other mortgage broker that's just used to your average lenders, your average pool of lenders for residential buyers. So, if someone's potentially, listening to this and going, how can I, boost my business, or how can I offer some more value to customers, tapping in to seeing the lenders that can lend, self-managed super funds and taking on that little niche, I think that's going to be even more sought after in the next decade.
I will do that. Use that as a very cheeky segue to Mariah, who's lurking in the background, who runs all this technology for me, to remind me we need to do a upskilling series on SMSF funding and how that's so. We'll do that, and Mariah won't forget to tell me. Thanks, Mariah. In the background. Hey, so talking about hoops, right?
Yep.
Hoops around. How is the real estate market dealing with COVID? I guess it's on a state-by-state basis as to what the premiers say you can and can't, or the chief medical officers say you can or can't do. But is there a new trend towards digital viewing of property, so by video, or somebody walking around with a camera and they're on FaceTime or something like that? Is that happening, or what impact is COVID having?
Okay, just like you said, it's a state-by-state basis, because there's different, when we go into lockdown or when we have restrictions, each case handles it very differently. So each case in each state imposes different changes, regulations, COVID, safe practices on the real estate industry. So, but the long and the short of it is, yes, a lot of it is moved to virtual means. We have to pivot, and often it's pivoting with very little notice given. So that could be the number one thing I think that changed was online auctions. So that's one. That was a very big pivot. That was, instead of us all, going to a property and battling it out in person, so to speak, it's pivoted to online a lot of the time. So whether that's via Zoom or another platform, there are a number of virtual auction platforms that I think if we had shares in over the last 3 to 6 months, we'd all be retiring very soon. I think they went gangbusters, but exactly what you say, it's private inspections. That has been one. So instead of it being open homes, it's been more one-on-one, or in some states it's 2-on-1. Other times it's only walkthrough videos. So definitely there have been some states where the whole private inspection thing even has been taken off the table. There's been no attendance whatsoever to inspect properties, and the sales agent has had to just go in and do either one walkthrough video or schedule people in with a virtual inspection and literally go and do multiple FaceTime inspections where the Q&A is done on the spot, with the person. So I definitely think for real estate agents, it's been a lot more resource demanding with the whole COVID thing. So I think it's been a lot tougher on the real estate industry and those working in the industry to try and accommodate we'll call it the digital, requirements of COVID.
Because the real estate gig is a very much in-person experience. It's rarely done like this through a video or through recordings or just looking at pictures. It's always a very emotional, very feely, touchy, go have a look and warm to the place sort of thing, and physically see it. So, interesting times.
But it hasn't stopped it, Whitey. It hasn't. You'd think it would have. You'd think the property market would have paused, or you'd intuitively think that buyers would go, "Oh no, I really want to see that property. I've got to step my 2 feet into that property to know whether I want to buy it." I'm amazed how many people are buying, like, physically sight unseen at the moment. And this is not just investors, this is owner occupiers, a good FaceTime video and they're like, yep, I'll snap that up. I never in a million years would have thought that means of buying would have worked so strongly. Same as online auctions. You'd think, you'd need to be there in person. It
Yeah.
really hasn't made much of a dent.
It's amazing.
Yeah.
And we see, I guess, the parallels in the finance sector as well. And there's current regulatory moves at the moment to bringing what was done short term through COVID to make permanent with digital mortgages, digital signatures, and digital conveyancing settlements and all that sort of stuff. I think that's some of the, out of what was a very dark period in what will be my lifetime anyhow, that this will bring some good at the other end as well, because there's been some things that have been forced to be made to happen. It's also shown and highlighted some of the things that are still not good, and maybe even worse, because it shines a different light on that, because all of a sudden you improve this piece, you go, well, that is still really shithouse over there. We have done nothing about that. That must get fixed. It needs to progress. So I think it's like anything, with all adversities, there's opportunities and so on. And COVID was something that hit all of us. I can still remember what I was doing March last year before all this started. I was at a conference, and then I went up on phone calls with the board trying to work out what the hell this thing was doing and what we were going to do about it. And it just bang, came on all of us. But interesting times. We're all resilient, and we've all adapted one way or another to do it. One, though, I'm interested to get your thoughts on is, how have valuers gone with this? How do you value a property in this marketplace where expectations are up here, reality here, and you're trying to look for a lender's interest back here for a mortgagee position? You're going, good luck with that.
I think that's been a real tough one, because I think when the market's more stable, you know, there's a lot of desktop valuations. We all know that there's desktop valuations. And I think it's been a lot tougher in this market, because the desktop valuation theoretically is, you know, here, and then the property sells for here, and exactly what you're saying, there's such a discrepancy there. How do the valuers meet in the middle somewhere? I do think in the Sydney market, generally speaking, for quite a long time, there has been a bit of discrepancy there. So I think it's almost that craziness has been a little bit easier to handle in Sydney, but in regional areas, that's happening. In interstate capital cities, that disparity is happening. And I think it's those areas that the valuers, there'll be even more of a struggle, because they're used to the sales price of a property being, you know, pretty, I don't want to say an easy estimate, but it's usually in line with a value. It's in line with a valuation. It's a lot easier to predict. With the way the market's gone, and as I say, it's capital cities, and I think I didn't even know that even in regional areas that this market growth is happening. So I hear you. I think for valuers, it's actually been a real struggle, because they need to justify their findings. I have had to prepare.
Going.
I've had to prepare more comparable market, like really signature reporting at my end as a buyer's agent. I've had to actually prepare more for valuers, for them to get it across the line. I've had to prepare more in the last 6 months than I've done in the last few years.
They're principally coming to you for guidance.
So they're basically coming to me going, can you give us something? Can you give us some evidence here? Can you do a report or something, Kitty, that we can take to the lender to go, see, this is what's happening on the ground. This is what's being experienced.
I hope you're charging him for that. That's worth money.
Because they're stuck, you know. They're stuck with this. So I think it has been really difficult for valuers, definitely. But something we haven't touched on, and I'm going to ask you a question now. I'm going to ask you a question, throw it back at you if I may. It's a little bit going off on a tangent, but what I'm hearing at my end is mortgage brokers are really overworked at the moment, and they're really stuck handling their clients that need things done like this, because the market's moving like this. But the whole administrative, you know, bureaucracy, institution, the whole lenders thing behind the scenes, administratively is moving very slow, that there's a backlog. So I'm seeing mortgage brokers being stuck in the middle here, as they're the ones trying to handle client expectations, going, I'm doing this as fast as I can. I'm trying to get this over the line and handle your file as best I can, as fast I can. But there's an obstacle over here. You know, over here with the lender, there's a, I don't know, a 2-week wait or a 3-week wait, or there's a whatever, even sometimes with refinancing. So this is not just with new purchases, this is even with refinancing. And so you've got the poor broker here copying it from their client, and they're trying to get onto the lender and speed them along. But obviously the client doesn't deal with the lender directly. So it's the broker, the poor broker here, that's kind of stuck copying it. What are you seeing at your end? Because you did mention at the start of this session, you popped up the good old mental health line. And I actually see at my end, the brokers are really suffering. They're working these long hours and they've got so much work on their plate, and they're caught between a rock and a hard place.
So yeah, so just on the confidential counselling program, we've been working on that for about 2 years to bring it to market. And there was a damn good reason why we pushed it forward when we did, because the cracks had appeared and we're getting worse. And yeah, the stress in the marketplace has been off the dial. And yeah, there's been a lot of conversations around this. I've used this program to actually talk to this, to try and help brokers through it, as well as what we do in media and in our conversations with lenders and so on, and regulators. But yeah, one of the keys to success in managing the expectation of the client in this environment, and in any environment, but it was so much more pronounced now of this period, is to deal with it up front. Is don't expect an answer in 1 week, 2 weeks. It could, at one stage, turnaround times were blowing out to 50, 60 days, especially when COVID first hit, because all the lenders were offshoring their administrative processes. That all went to the shit. That didn't happen, and then they're trying to work out, how do I deal with this monumental mountain in front of me to process, and couldn't. Now, a lot of them brought that back on shore. They promised to develop technologies. And I remember the conversations from the latter part of last year on this, and there was all these wonderful statements. The fulfillment's been very protracted. So that's why we're seeing at the moment there are enhancements in legislation legislation trying to be put through it on digital mortgages and digital signatures and so on. These are things to keep things moving. There needs to be a proper digital fulfillment within our sector. It doesn't take away from the interview process dealing with the borrower, whether that's through a screen or whatever, or face-to-face, but the grunt work. The grunt work, which is the stuff that lenders have built these enormous administrative teams to process, need to be streamlined to digital. Now, we did it here in this operation, and we're only tiny, minuscule compared to anything like that, but over 2 years ago, I built a piece of tech that we called Rails, and it was Rails app, and that was to fast track approvals. We've now taken Rails and embellished it into another piece we've just done. It's basically, for a member somebody to become a member or to renew their membership, by the time they fill the information online, hit click, AI, if I get it right, artificial intelligence, and the system drives it all in the background. 30 seconds later, there's your membership certificate, right? Yeah. You've got to get technology to drive the grunt work, to take the headache and the heartache out of this, because coming back to your point, the borrower doesn't care. It's not their problem. They're just trying to get a loan, so they want to buy that house, or they need to refinance to put a pool in, or whatever it may be. And yeah, it's been an extraordinarily difficult time for brokers. But hopefully we push through that. We manage the expectation earlier. We need technology to get the grunt work done, and we move on. And look, our market share's growing. Brokers have never been busier.
I think it's just that acknowledgement. I think it's the acknowledgement, Pete, as well. I think that's the solution focus, but I think it's about opening up that conversation and going, we realize you're working bloody hard. Other people may not see, your clients don't see, your clients just want everything yesterday. But from someone that works with brokers every single day, I absolutely respect they're doing the bloody hard yards, and that we see that. Do you know what I mean? We see that and we acknowledge that, and we know it sucks, but you're doing a great job.
Yeah. Kitty, on that note, I'm going to have to love and leave you. We're out of time. But look, thank you once again. Love the conversation. And if you're up for it, I'd love to come back to you and probably the back end of the first quarter of next year to see what the latest is, to see what's happening, to put a bit of a gauge to things and keep tabs on the pulse of the real estate market. You're the expert, and I love the conversation and your knowledge and information that you can share with us about what's happening. So thank you so much. And,
thank you for having me. Thank you. Thanks for having me. It's always awesome.
Take care. Thanks. Speak to you soon. Oh, well, thank Kitty for us. She's wonderful, wonderful. What a great source of information and knowledge there with all of that. Nothing like experts in the field. We're experts as brokers. She's an expert in the property side and being independent of the real estate agent, the seller, like you're independent of the lender. We'll debate all that another time, but anyhow, you're there acting in the best interest of the client, and that's what's important. All right, moving on very, very quickly. Coming up next month, we're going to speak to Jill Berry. She's the CEO and co-founder of APRA. This is a conversation all about consumer data right access. You want to join us for this CDR, consumer data right access, and all that sort of blockchain technology stuff that we all go on about. Now, you want to be part of that. It's going to be really, really important, and you'll enjoy it. So make sure you join in when we get together on the 18th of November to be a part of that. It's going to be very, very informative. You will learn so much and get a glimpse of the future and where we're going. And it's not Terminator either. So, all right. Thanks for joining us. Don't forget the confidential counselling hotline for you to look after. If you've got any challenges with depression or anxieties, if you need professional help, ring that number. Don't forget to join us on the 19th of November for International Men's Day. Women and men, yeah, it is a men's conversation. We do International Women's Day at the beginning of the year, International Men's Day at the end of the year. Register, be a part of it. It's going to be a lot of fun. And of course, don't forget, yeah, we had to move the date again, and yeah, nothing gives me the ear, it's more so. But hey, we're on, come hell or high water, 11th of March is 2022. It's our 2011 conference. So it's the one we should have this year. We're having it then. The content is just brilliant. Nighttime, heroes and villains. You're going to love it. You'll never guess who I'm coming dressed up. And if you can guess it without being informed, I'll give you a free ticket. Hey, want a free ticket to come to the conference? Guess what I'm coming dressed as to the conference, so long as you're not informed. If Leah Renwick's tips you off, doesn't count, right? All right, there you go. There's out for you. Register for the conference. Come along. Thanks for our sponsors, wonderful people. We appreciate them supporting us as always. And don't forget, you get your CPD points for joining us. There'll be a little questionnaire come out. Please respond to it to the little survey so we can make sure we're gauging things properly at our end. But for now, thank you. Take care. Be well, and we'll see you soon. Bye.